Good morning, everybody. How we doing? Morning, Stevie. Morning, Ladder. Morning, Jane. Got a down day. We got a down day on the DAX. It's working. How's everybody doing? I'm having a hell of a week. I've just been funded with 100k. I love it. Another 100k. I haven't got 50 of it yet, but passed the take profit trader yesterday, which is awesome. So that's in the bag. That's a new prop firm. It's my first funded account with them, third attempt. So I will let you know how I get on with that. But the beauty of Take Profit Trader is you get paid whenever you want. There's a withdraw button, and you can literally just hit that button whenever you like. Unlike all the other firms out there where you've got to wait 10 days, 2 weeks, or there's restrictions on you can only draw out a portion of it or whatever. They just go, yeah, no worries. Whenever you fancy it, had a good day, I'll have it. So looking forward to that. So hopefully I can get some profit in the bank and actually do a withdrawal and prove that is actually the case. So there's a lot more restrictions as well, though, when you're funded. So can't trade news, I've just found out, which is a little bit annoying. But in futures, actually, that's not a bad thing because it goes the wrong way in futures. When you're a news trader, you can get slipped and you can get hurt really badly. I've been there, done it. So yeah. Morning, Diamond. Right. So let's have a quick look at overnight. We had GDP for the Aussie yesterday. So we had positive CAD news as well yesterday afternoon, which is good because I'm looking for some positive CAD news because I've got a short on New Zealand dollar CAD. We've obviously got the rates this afternoon. So this is the biggie today, 3 o'clock. We've got the interest rates for the Canadian dollar. Fingers crossed they come out at 4.25. If they came out at 4.5, I would be very happy. I'd fly over there and kiss the Bank of Canada's governor's feet because that would just completely get me out of the situation that I'm in, which is drawdown. But yeah, looking for positive rates, looking for as expected. As expected will be fine. Positive, even better. I doubt they'll go positive because it means they're going to have to pump it by 0.75. But yeah, 0.25 would be lovely. GDP figures for the Aussie overnight were a miss by 0.1%. They were forecasting a 0.2% decline, so they would expect the market was expecting it to decline. So that was already factored in. The fact that we have got that decline and it was slightly worse than normal isn't the end of the world. These are only quarter figures as well. The monthlies tend to be a little bit more impacted, but so yeah, it's not looking too bad on the Aussie. It's holding up this morning. So Aussie New Zealand, for example, is one that I'm in. So we had a down day yesterday, Aussie New Zealand. We had a nice big strong push up, but we obviously pulled it back. So we are holding though on the news at the moment. So if you look at the hourly, this was our low yesterday. Then obviously the interest rates took it up for a double top. We pulled back. I was expecting to get a move out of the propulsion gap and it didn't. We haven't made a new low though. So this morning, obviously on the GDP figures, we had the drop, but we haven't actually gone anywhere yet. So it's really, really key day today. Those interest rate figures yesterday should be positive, but as a worst case scenario, because they are what they are, we should at least slow the decline and stabilize the Aussie. It's all going to depend really on what the other currencies do with the Aussie. So, it's pretty stable against the CAD. The Swissy, it's been coming down, but it's not broken. It's just about broken weekly lows, previous weekly lows. The yen, obviously, we know is strong at the moment. New Zealand, it's been tanking against because New Zealand's doing very well. And US dollar, obviously, it's been a bit up and down, but it's stabilizing. So I'm hoping that we're going to get a little bit more positive reaction off of it. As soon as we get this double top done, we've got this area here of accumulation, which we're going to struggle to get through. We're going to, I don't know whether we'll struggle or not, but we're going to find some limits there. Once we're through that, we're up here. This is where my TPs are sitting. So yeah, looking good at the moment today, but I want to see some strength in London, ideally, on the Aussie. So CAD this afternoon, looking for positive movement on that. So if you're not in any CAD, there is an opportunity to take some CAD. We should get positive movement off the CAD, whether it be short term or long term, depending on what comes out with the rates. So anything against the CAD, you could look at potentially shorting. New Zealand CAD. We've got obviously New Zealand. You go long New Zealand Swiss, New Zealand yen, not so much. New Zealand US has got a very nice propulsion gap to come and retest. So there's potential to move up today. You know, we could get an ADR hit on that. So we'll see. But that's all happening this afternoon at 3 o'clock. And tomorrow we've got a fairly flat day. Bits and pieces, unemployment claims tomorrow. And then Friday is the big day for the PPI figures and UOM. So Michigan is very hit and miss, but PPI is the other big one. And then next week, it's obviously Hell Week. So, yeah, would love to get flat this week. Would really love to get flat this week, but I'm not sure what's going to happen. So, looking at the indices. So, yesterday, overnight news as well. There's some overnight news as well, actually. Can see if different options respond to oil price caps. Right, so you know we had this tanker traffic jam off of Turkey because basically Europe went, we're going to pay $60 a barrel, and then Russia turned around and went, you can pay what you like. But at the moment, the going rate is 73. So they parked their tankers outside of Turkey and said, do you want it or not? Interestingly, overnight, Hungary, come on, load. Hungary said, all right then. We're going to remove the cap. How much do you want for it? So I think this is a precursor to basically this cap. You can't put a cap in. You know, it's like saying to our energy companies at the moment, you know, you want 400 quid a month out of me for my energy. Oh, I'm going to pay you 250. All right, no problem. That's fine, sir. Turn it off. Yeah, you can't. You have to pay the going rate. You can't say, I'm going to pay 60 and throw your toys out the pram. They want 75 for it, you get 75 for it. That's it. That's the way it works. Unless there's someone that's going to sell it to them for 60, in which case they're not, there's nothing you can do. So that started. If they've had to do it, I should imagine some of the others will as well. So the drop that we had in oil, I suspect there's a possibility that will pump again. Big down day yesterday. We took out the lows. So we'll see what happens today. But any kind of price action down by these lows, look at that 73,518 level that it tapped into to the pip. That's that high that I put in there. So yeah, I would expect potentially to see a price increase on that because Russia don't really seem to want to pay to take 60 for it. So, but we'll see. Apart from that, overnight there wasn't an awful lot. China's lifting more lockdowns again. Oil demand is going to go up, therefore oil prices. So yeah, I mean everything basically is pointing towards oil increases. But that's all the news there was overnight. Mainly it was all about China. So yeah, we'll have a look at oil. You know, it's be an interesting one to see what happens with that. Market's just opened. Got wow, nasty opening range again today. So on other news, I passed this account yesterday. Passed it in a day. Boom, 4,300. Target was only 2.5. So I banked $4,000 yesterday. Most of that was done by the EA yesterday afternoon. I had it on aggressive mode. Well, I had it on 1% risk, which is pretty aggressive. But the idea was to pass the prop challenge. So I've got to sit here for 4 days now. So I've reduced risk down by more than 50%. So it will trade this morning, but on a reduced risk, just to keep trading for 5 days, basically. So I'll get the funding for this one next Tuesday. Blimey, look at that thing go. This is not going to be an easy session. Got 2.5 minutes on that candle. So while we're waiting for that opening range to form, the DAX, obviously we had the down day. So I've been waiting since the US dollar news, and obviously the US dollar weakness. We obviously got a push on the indices. We pushed up, we made a small range. Then we broke out of that range up into a new high, which held, and we've held this range. We broke it yesterday. So there's two levels here. There's two parts of this range. First part is here, which we broke yesterday. The second part is here, which is ADR today. So one or two things I can see happening. Either we're not going to get this Santa rally and we're going to stick in a range, in which case then we're going to have sideways movement and we're going to look for bull day today up into this range high, and then we're going to start shorting the high of the range. Second thing is this is the start of the next bear run. So this candle here, obviously we could pull back up inside this candle and then put in a bear candle again today. So start this move to the downside. So those are your two options today. That's a hell of an opening range. Look at that. I haven't seen an opening range like that for a long time. 50-point range. How'd you trade that? You're going to get inside bar after inside bar all morning, aren't you? So we're pushing up into propulsion here, pre-market. Well, the EA is basically just going to place an order there and there. With a very small, well, it's not now, it's going to place it up there. With a very small position size. Because it's a high risk, so it's going to go in with a small lot on that. Wow, look at that. Okay, so that's not mucking about this morning, is it? US indices, same story. We're still in the range on the NASDAQ though. So we formed this range on the NAS. And we tapped it yesterday. We're still in that range, but that's 4 down days on the trot. Definitely due a pullback, obviously, on the NAS. S&P, we broke that range low. We didn't manage to break and hold below. So we've tapped into it again, signs of rejection. Obviously, the S&P, we are looking at that trend line rejection at the moment. God, it's a biggie in it. Look at this, that tiny little loss it's taken. And the Dow, again, we didn't quite get the low. So the only reversal alert that we got given yesterday was on the DAX. The rest of them, we're still in a range. So difficult. Again, you know, we haven't got any clear direction, have we, at the moment still? So we pushed up on the negative news on the US indices. We had the accumulation. We pushed up a little bit more. We had that big day, and then we rejected that. So it's all pointing to a reversal, but it's just like a spluttering car at the minute. The DAX is the only thing that's actually managed to make any headway, and the DAX is the thing that actually made more headway than all the other indices when we had the bull run. So it makes sense that the DAX would go first, which means that these indices should all get dragged down with the DAX if it goes down today. So if we get a negative DAX day this morning, I get the feeling the US indices are going to come down this afternoon as well. So we will see. But certainly looks bullish this morning, doesn't it? Looks like all of the Germany Christmas money went into the DAX. Yeah. It's only the opening range though. So. Morning, Seymour. Yeah, just we'll see. When we get these big opening ranges, quite a lot of the time, if you go back on your charts and look for large opening ranges at the open, what you quite often get is a break to the high off of the back of the opening range, and you get like probably 1 or 2 candles which pumps. So you end up sitting sort of, you know, like that and like that. You end up sitting there, and then it just goes into this rangey thing for the entire session, and sometimes pulls back into the inside opening range and just sits. Because what it is indicative of is all the volume for the session being done in 3 candles, and that's it. You're out. You've had enough. And you just get exhaustion. So obviously we're not breaking anything yet. So we might just sit inside bars. But if that happens, it happens. And this is why the this particular EA has a time limit on it. I haven't got the opening ranges on here, obviously, because it's open the VPS. So this is why I've put a time limit on this. I'm not interested in what happens after the first hour and a half of trading. So if my VPS is so slow sometimes. So you can see there the opening ranges. Yeah, they stop after 1.5 hours. At that point, it cancels off the pendings and stops trading. So, if it hasn't happened in an hour and a half, which is here, yeah, if we've just done that, I'm not interested because it's not doing anything. It will break at some point, obviously, but I'm interested in the whole purpose of this entire strategy is volume and momentum at the open. That's an hour and a half after the open is volume done, going to lunch. So it doesn't trade after that. You can adjust that as well. I have not, that's one thing I have not tested in all of my testing. I haven't tested anything beyond that. And that's partly because, we know that an hour and a half is quite often the end of the volatility on all open market opens. Oh, look at that slippage there. Pending actual trigger. Slippage is a real thing. So one long. So yeah, indices, we'll see what happens. It's going to be a key day today. If we get that bear move in, if we do get a push up midway, brilliant. But I'm more expecting a drop today. I think we could well start a very swift downfall into Christmas. But we will see. Morning, Tammy. ADRs this morning, we have none. We've got the US dollar CAD has already hit its weekly. We're on Wednesday. So midweek reversals. Yeah, US dollar CAD has hit its 286, which is there roughly. So it hit yesterday. So potentially this could be getting to exhaustion levels, but we do see often 150 ADRs, AWRs, average weekly ranges hit. So monitor that one. We've obviously got news on Friday, and we've got the CAD figures this afternoon. So if we get positive CAD this afternoon, this will be coming down very sharpish into these propulsion gaps. So all going to be driven by Canadian dollar later on. Nothing's hit the monthlies yet. So there's nothing on the ADRs at present. Your RSIs, we've got nothing on the 4s. The 4 hours are all turned off. We've got a couple of hourlies on yens. So Swiss yen is extended on the hourly. So potential pullback on that one forming. We've got a nice propulsion gap out of that accumulation there, where we're potentially going to meet some sellers. So there's a potential short entry there. And I like everything short against the yen at the moment. Saying that, figures are still bad for the yen, except obviously the intervention. So, when you're looking at fundamentals, the fundamentals for the yen are bad. Their interest rates, their inflation is all not good. It's all negatives, which would be detrimental to their currency, which we know because it has been. But one thing fundamentals don't take into account is interventions. Interventions are not a monitored fundamental, and they've intervened twice now. So the market's too scared to long it because they know that at any moment they could come around and intervene and pump it whenever they fancy. So I think this is why we're seeing this weakness in everything against the yen, because the market's not interested in buying at the moment. So through more of a fear thing than a fundamental. But obviously good looking spot for starting a short position if we're going to continue with the yen strength. Euro Swiss as well. That's extended to the downside. Euro's been nicely pushing against the Swiss franc. We've just had a reversal alert on that, so there's been obviously a fair bit of weakness, but fundamentals look good for the euro moving forward. They also look pretty good for the Swiss moving forward as well. So you've got that like a long against a long, which means you quite often get an awful lot of up and down, because as they push and pull against each other with strength, you just get sideways movement, which is range, which is why they happen. So, but overall, long term, I think maybe get the edge with the euro. But again, it's difficult to tell. These are kind of neutral, really. This becomes a neutral pair when you've got a strong against a strong. So, yeah, we'll see on that one, Euro Swiss. But you've got potential long opportunity there, which is playing out nicely. You just had a reversal alert on M5 this morning, which is just retested. So you're just about to get an arrow there for potential long opportunity. This propulsion gap's just broken that low. It's not bad. It's obviously been respected once, so you need to be watching that area for potential sellers this morning. The other extension we've got on the hourly is just New Zealand yen. Beautiful range high opportunity as well. So we've got double top potential here, which is what we had playing out yesterday, and they're just taking the high. So I guess this is New Zealand's strength. Yeah, yen weakness this morning, not New Zealand strength. So this is yen weakness. Yes, we've got a weak yen. So looking for opportunities to get in shorts on yens. There's a lot of them this morning. So oil played out nicely to the previous low on the hourly. Yeah. So we've got this level here, which is last week's low, Monday, which we rejected. We just tapped straight back into that again. But I'd want to see a break of that high. And when you break that high, you're going to run into a load of sell orders. So oil's got a tough climb ahead of it. And this is the thing with oil. It's there's no reason whatsoever why it can't just do that again from this low. Yeah, if we're going to stay in a range, don't forget when you have bullish fundamentals for something, it just runs away. When you have bearish fundamentals, it runs away. When there is indecision or neutrality, which we have at the moment, it goes into a range. And oil is no different. You haven't got a cross with oil. Oil is oil. So the thing that causes neutrality in a commodity is uncertainty, which is what we've got a lot of at the moment. We've got oil having caps with some countries and other countries not. We've got producers capping production. We've got supply problems because of caps put on by other countries. So the market is sitting there not really knowing what's going to happen until we get some more news about what's going to happen. So you tend to get into ranges, and it will bounce around. And all currencies, all commodities will do this while there's uncertainty. It will bounce around because there's no direction. So we're entering, and all a range is a period before price discovery. So the market is trying to find out what the going rate for oil is. Last week, it was down here. Is it still down there? If so, we'll pop up. The previous price discovery failed at 83. That will remain the case until there are people willing to purchase oil at a higher price or at a lower price. And that's when you get your range breaks. And then that price discovery, let's say we break to the downside and go for price discovery down to $70 a barrel. If there's no buyers, no sellers, we can't transact down here, the buyers will pull it back up again, because we know we can transact here because we've done it plenty of times in the past. We've been transacting at 73 to 83 quite happily for the last week. We'll try and transact down here, but if people aren't interested, we'll have to come up again. That's a failed breakout. price discovery. So price is trying to find where the equilibrium is. So if we bounce from here, come back up to there, but watch this area. So yeah, oil, I say I'm not trading anymore this month. Position trading anyway. So there. I don't know. I believe we're also around 100% average weekly range on oil. Yeah, I haven't got oil. We are. Correct. Yeah, so we've hit AWR as well. Obviously, boom, in 2 days. So yeah, it's all got buy written all over it, isn't it, at the moment? You know, if there's always an argument for a stop loss trade, and this is exactly that right now. You can hit the buy button right now with a stop under that low, and it's a tiny little risk. Add to it when you break that high, and then move your stop up to protect that order. And if you're going to go there, brilliant. Add again when we get the hourly reversal alert, because you still got that much room, at least until you hit any kind of resistance. Add again when you break yesterday's high. Yeah. But little starter position down there with a stop there, or if you want to be conservative, stop under yesterday's low. Great trade. What I'm tempted to take, to be honest, but I'm not going to. I'm letting the EA do the work. 3 positions long on DAX. So that is the 5-minute, 10-minute, and 15-minute opening range broken. This is real money now, so I'm going to be... Oh, no, it's not real money, this one, is it? See, this is very small profit, because this is... I've reduced the risk down by 2/3. And obviously, we've got a massive range this morning. Huge. So obviously, lot size is tiny because stop is massive. You can see it's obviously dragging the stops up. So risk is reduced anyway, but I don't fancy this morning, to be honest. I think that's a liquidity run there. I think we're coming down. But we'll see. I don't know anything. Right. So yeah, so there's your ADRs, your average weekly ranges, etc. I'll keep oil on the ADR. It's worth and weeklies. It's worth watching. Should really add the indices on here as well, but yeah, that's a good one to know. ADR, I'd imagine it probably does ADR quite often, oil, because it's so erratic. Yeah, that was an ADR hit. That was nearly an ADR hit. That one wasn't. That was nearly... I mean, it almost hits its ADR virtually every day, doesn't it? It's pretty consistent. 300. So 369 ADR, it's regularly doing 300s, and then obviously you get the old 600, and then another 450. That was an ADR. That's, you know, so you get a lot of ADR hits on it, but it doesn't go too far beyond it. But when it wants to go, it just goes, doesn't it? This is the trouble. This is why it's a position trading nightmare, I think. So anyway. Right, so I'm going to run through the pairs. Again, you have to take today with a little bit of a pinch of salt, because obviously, as we know, anything to do with the CAD, we can't. There's no idea until this afternoon. Something's going to happen with the CAD this afternoon, one way or the other. We've got more PPI news on Friday, and then next week it's just total carnage. So whatever I say today, tomorrow, or Friday, throw it all out the window on Monday, because it's all change next week. So very, very difficult to make any decisions on anything this week, because we're likely to either get affected by the news that we've got with the CAD and with the PPIs PPIs. Yeah, this week. Sorry, so many things: PPIs, PMIs, CPIs. That's the producer price index, by the way, PPI. So yeah, anything that we look at is likely to go into some kind of multi-day range ahead of next week, because the market isn't going to want to make any long-term decisions or make any long-term movements until they know what is going to be happening with interest rates. And next week is interest rate heaven. We've got FOMC, we've got GDP figures, we've got inflation figures, we've got interest rate figures, we've got absolutely everything you can possibly think of. We've got the PMIs all next Friday. There's a press conference for the ECB. We've got retail in there. You know, it's just utter chaos. The entire week is going to be mental. So I think at the moment, what we've got to do is just concentrate on where you are now with the positions that you're in, and take any short-term positions ahead of next week. Morning, Alex. Also, New Zealand at yesterday's low. Yes. Oh, that's nice. Right, so this is the area. I think I posted. Did I post this in the Telegram group this morning? I think I did, didn't I? What did I post this morning? Yeah, yes, that exact picture I posted. Yeah, but I was looking at the hourly chart. So yeah, those are the levels. I did that on my tablet, which is why it's not drawn on here. So yeah, that's the levels that I was looking for tests of today. We need that to hold. That's got to hold. If that doesn't hold, I'm out. I'm going to start scaling out of this and taking some losses. Fortunately, I've made decent money scalping this month and the last month, so unfortunately, I'm going to have to use some of that because this Aussie New Zealand is just getting a little bit too deep. And these interest rate figures I was hoping for, and I knew we weren't going to go much more than that because this was 150 ADR when the interest rate figures were announced. But what I was hoping for was either a hold and push and break and market structure to sit like that, or some kind of accumulation. What we actually got was a break to the downside. So this has got to hold. This is the key session, London. We need to come back up and talk to Asia highs and let New York get some breathing room on this thing. So yeah, key level there on Aussie New Zealand. And looking at the drop on the Aussie New Zealand, this is absolutely brutal. Absolutely brutal. We've got to a point now where we have had no real profit take on this move. I class these as very small pullbacks. This is not a profit take move that I would usually see. You would usually see something a little bit more pullbacky, because you wouldn't normally see a decline that's as steady as this. Declines usually, collapses and pullbacks and collapses and pullbacks. This has been just a steady decline and like hardly any pullback on anything. Yeah, it's been awful. But these levels here are the key levels. So the lines that we've got drawn in here, we've got lots of areas we've looked at which have all failed. Everything has failed that we've looked at in the past so far. And these were the last kind of stands from where we are right now. We need to hold this level. If we don't, we're looking at, we're not far off parity, are we? Where's parity down there? There's parity. Last time we were there was in 2019, December, or probably that might be January actually, 2020. Oh, that's COVID. Right, sorry. So yeah, so last time we hit parity was COVID. So we don't want to be thinking that, do we? But look at the previous drops we've had, and look at the steepness of this one. This is the most brutal drop I've seen on Aussie New Zealand ever. This is just you talk about the elevator shaft, climbing up the stairs and falling down the elevator shaft. This thing's hit the bottom, it's not bouncing. It's landed on the spikes. But you've got to get some kind of pullback on this. People are going to be thinking, we've got to get out of this and take some money off of it. And it's whether they're going to do that before Christmas. A lot of books try to get balance before Christmas. So there'll be a lot of institutions looking to take profit on these moves. We've just had positive rates on the Aussie. GDP is not so much of a forward forecaster. GDP is an after monetary policy news event. So it's what we see as a direct result of monetary policy. It's not a leading indicator that the Fed or the Bank of New Zealand and Aussie will use to adjust things. It's like, what impact has it had? So, where we are here, we're at a key spot. If you go back and look through history, this area here is a key area we have had lots of reaction at before. It's never exact, obviously, but somewhere around here is a kind of midline, if you look at it on this range. So it makes logical sense for the buyers to start getting a little bit interested in the Aussie, because they have done what we expected them and wanted them to do with their rates after cocking it up last time. So this is their punishment now, and they need a bit of a relax. So the sting in the tail is this New Zealand dollar strength, which has come out of nowhere and it's just going crazy. So we need a respite in that, and we need the market to sit up and pay attention to the Aussie dollar. So we'll see. Key level this. We'll see what happens. Interesting. But yeah, if not, tricky. They could do one more liquidity run on this low before they go, because they have just double bottomed it. They haven't, and obviously you can see why that double bottom happened. Yeah, the Wild and his wife that's buying this is sitting here with a limit order and sitting here with a limit order. These limit orders have just triggered. It's whether or not we've got enough sellers today to dump this further. So we'll have to wait and see. But yeah, key levels on that one. So we'll run through all the pairs. Bitcoin, I should imagine, yeah, collapsed a little bit yesterday. Well, it paused yesterday, actually, collapsing today. So it's following the indices. Right, so Aussies, obviously you can see a lot of rejection there on Aussie CAD. The Aussies obviously had decent rates. As expected, nothing over the top. The Canadian dollar has been massively weak. Again, it seems pointless talking about it. Don't know what you want to do with this today, but if we get a strong result on the CAD, interest rates at 3.30, bang. Otherwise, bang. Whatever you're going to do today, you're going to be driven by 3 o'clock. Yeah, 3 o'clock this afternoon. So what you can't really do anything with this. And this is a typical, this is what I'm expecting now moving forward into next week. This is typically what happens when we've got interest rates coming up. The market is factoring in what it's expecting, and then we go into pause. We're waiting for the interest rate announcement. So we went into a 3-day accumulation, waiting for the interest rates yesterday. We're not going anywhere at the moment because we're waiting for the interest rates for tomorrow, for this afternoon. So when those come out, the decks are cleared on Aussie CAD. We know exactly what the Aussies have done with their interest rates. We'll know exactly what the Canadians have done with their interest rates. And then the market can now start to factor in the next interest rate increase. Both of these guys have said they are going to increase their interest rates again. So you've got, again, it's one of those currencies which is tricky. You're going to get a push and a pull against each other, and a lot of chop. So direction-wise, it's going to see, it's going to be who's got the best economy. Alex put me onto a website yesterday of a company that provides a scorecarding kind of system, which looks pretty good. And it's kind of what I've been talking about building myself, which is what the institutions will use, the scorecarding systems, to give a bias on a currency. And I started building my own in Excel, and this company that's produced it have their own version of it. Some of the bits on there I don't really agree with. They use trend, these moving average trend, which I don't agree with, because moving average trend is the biggest lagging indicator in the universe. You know, you can't scorecard this as a negative there. Not, is it? You know, just because it's down here and that's doing that doesn't mean that's not going to happen. So I don't really agree with moving average being used in it. And client sentiment they also use in it, which so I'm kind of interested in having a look at it. I've applied for a free trial and I'll have a look at it. I'm interested in the fundamental aspects of it, their scorecarding, which I agree with. So I'm going to have a look at that. But the Aussie and the CAD are both quite similar at the moment in their fundamental outlooks with inflation and interest rates and things. Let me just quickly look at what's going on with the DAX. Yeah, we've got. So this is a prime example of what I said earlier. You quite often get when you get an opening range that large, you get this little push, and then the market kind of goes into a hideous, horrible range. You don't get a trend day. So this is kind of indicative a lot of the time of a rotation day. And a rotation day obviously is where you want to be activating mean reversion strategies rather than trend-based strategies, which this is obviously trying to trend trade at the moment. Hideous wicks to the upside, hideous wicks to the downside. So you've got a battle going on between buyers and sellers here. We'll see who wins. One of them is. We'll see. Go on, the buyers. So yeah, I'll have a look at that software. And if it's any good, I'll start implementing it, because it's basically what I wanted to do anyway. It's my moving into the New Year's resolution thing. So, but if I can pay $600 for someone else to do it for me, I'll do it. We could all benefit from it then, but don't tell them. So yeah, Aussie CAD, I think you're going to get a lot of push and pull on these two. Fundamentally, very, very similar. So difficult to forecast anything on that at the moment. Aussie dollar Swiss, again, push pull, push pull, push pull. That's all we're getting at the minute on the, as you can see on the daily. So we're range bound. We're at the 4-hour lows. We're at the daily range lows. So yeah, we've had a nice bullish engulfing going in. We've got rejection, rejection, rejection. So all the limit orders at these levels. We were talking yesterday, weren't we, about how the market is driven by human beings, regardless of whether they're how much money they've got in their pots because they work for a bank or they work sitting at a desk like me. We all do the same thing. We all see the same thing. Everybody's seeing the levels. The limit orders are sitting there for the institutions, the retail traders, and everybody. They're triggering. So we've got the potential range low buy in there at the moment. Not quite extended on ADR, RSI. Hourly's not quite there either. It was yesterday. Reversal retesting at the moment. So if we break, we've got potential move back to the upside on that one. So range bound trade to the upside. You've had the reversal on the hourly. You've had the M15 reversal this morning because we put a new low in down here. So again, you know, we talk about multi-time frame analysis. You're going to get way more false signals from any indicator you use on lower time frames. The higher the time frame, the less false signals you're going to achieve. The less entries you're going to take, the more reliable everything gets. So 4 hours, obviously you're not going to get it until we're halfway to the range. So with ranges, you need to be looking at lower time frames, obviously. But it looks good for a range bound buy. Aussie dollar yen, liking everything short against the yen at the moment. Again, intervention is scaring the market to death. Your last thing you want to do is dump $20 million of someone's pension fund into something, and the currency intervenes and completely tanks it. So there's a lot of fear in trading the yen, I think, at the moment, and there's more strength in it than weakness at the moment. But that doesn't necessarily have to be long term. It could be a fact, you know, that we are just sitting in a kind of pullback at the moment, waiting for a next leg up. But I just get the feeling, you know, if that was to start to happen, the Japanese will do something. You know, they've proven that they can, and there's no reason why they won't again. So I'm looking for shorts, but I want to get some entries, some pullbacks. We've got a couple of opportunities, obviously, as we know, at the moment, with the New Zealand dollar yen and the Swiss yen, both in really good positions for shorts. Aussie New Zealand, oh my God. There we go. We got 20 minutes for that thing to pull back up. Sitting there doing nothing. So yeah, let's pull back. Where is next level on this? So that, I would say, is our next real support, which is 125 ADR away. But you know, this is off the scale. You know, this just is like such an overreaction to the fundamentals, isn't it? After this, you know, what has gone so badly wrong that happens? You know, it's almost as if like New Zealand dollar's grown twice the size and Aussie shrunk twice the size. They've suddenly started exporting minerals instead of milk, and these guys have just started exporting Smarties or something. You know, what on earth is going on with that? Has caused that? Yeah, they missed an interest rate rise by 0.25%, but does not seem to want to stop, does it? So we'll be monitoring that one closely this morning. I'll probably give it the 4-hour candle and see what we get on the 4-hour. And if that hasn't pulled back up, I'm going to start scanning out and taking some loss on this one, unfortunately. We'll see. Anyway, Aussie New Zealand. Yeah, I don't know what you want to do with that. It's a beautifully extended long, but there's literally every extension you're getting an accumulation. You're not getting any pullbacks on every extension. It literally has got no strength whatsoever. There is nothing. Every divergence has failed. Everything has failed on this thing. So it's just in freefall collapse at the moment. But you know, freefall collapse has to finish at some point. There will be a bottom, but you know, you can't keep going for bottoms all the time. You can't keep trying to pick a bottom. You've got to draw a line under the sand sometime and say, had enough. So I'll give it 4 hours. But yeah, I mean, fundamentals on this thing from yesterday, we got an as expected and a miss. So I suspect this is the market reacting to the miss. I'm not liking it. So this is outweighing the interest rate increase at the moment. When's the next CPI? We've got unemployment next week. I don't know when the next CPI is for Oz. Monetary policy. So the monetary policy is being announced before Christmas as well. I just get the feeling we're right on the cusp of this pullback, but yeah, got to wait until we've got a long way to go to CPI, haven't we? 11th of January. That's what's going to cause the next one. See, we did, you know, this is what caused the acceleration. Not just a miss, a massive miss. You know, and that is the reason they didn't do their interest rates as they thought they would. And look what the impact is. This is a warning shot for all countries out there. Yeah. Inflation is going up like that. You need to get your interest rates ahead of inflation so that the interest rates can factor it down. They go, oh, look, you know, and then they go, oh, we're just going to let the CPI get ahead of our interest rates. And then what happens is it all gets out of control. It just goes nuts. You know, they're just not doing it right. They didn't do it right in COVID either, did they? You know, you've got to ask the question, who's running that country? Anywho, Aussie New Zealand dropping. Aussie US, but we can't do anything about that, can we? We just have to going on with what they're doing. So Aussie looks weak this morning. We've got all Aussie pairs having a little bit of a tantrum this morning off the back of the GDP figures. So Aussie US is coming down. This is a nice short anyway. I'll be looking to short the Aussie against the US because I'm expecting US dollar strength. We got decent move down there with a propulsion gap. We've tested the propulsion gap. They're selling into it. Just looking for continuation drop on Aussie US. So any extensions to the upside? We didn't get one on the 4 hour. We got one on the hourly last week. So be looking for any extensions to the upside to take shorts on that thing at the moment. CAD Swiss. The CAD obviously massively weak. Again, CAD Swiss, CAD Yen, there's no point in analysing it. We're looking at this afternoon, 3 o'clock. There'll be a decision made on which way this is going this afternoon. But obviously, as you can see at the moment, it's Swiss franc in charge. Interest rate increase out of the blue. Swiss franc in charge, has been in charge of most things. So we've had a weak CAD and a strong Swiss. So from a scorecarding perspective, this has been a short. Morning, Alan. I would expect positive movement this afternoon. That is because I'm expecting an as expected or a bullish rate announcement. So either we're going to get the 4.25 or potentially a 4.5. Obviously, you never know what's going to happen until we get there. And it's the same thing. Look, what did they do last time? What happened to the CAD? What did the Aussies do last time? Missed. What happened to the Aussie? This is what it's all about. The market, if you do not come out as expected on your interest rates, you will be in pain. Yeah, this is what is driving. This is it at the moment. It always is, but we've been so used to static interest rates for such a long period of time. The market, this is why we've got this volatility at the moment, because the market is having to readjust itself to, all right, this is driving us now, not COVID, not anything else. It's all about the interest rates. That comes out at 4, CAD is coming down. Market is going to overreact to it, and rightly so. But so yeah, I don't know. But the problem we've got with the CAD as well is, they're 4.25. They're going up to 4.25. Forecast to go to 4.25. That's one of the biggest interest rates out there at the moment. Yeah, you can only go so far with your interest rates before it really, really starts hurting everything. Housing prices, mortgage, everything apart from savers. There aren't any of us because we're all skint after COVID. That's the only thing it helps. Borrowing goes up, mortgages go up, cost of goods goes up, everything goes up. Unemployment comes down. Unemployment goes up. So the employed go down, people lose their jobs, companies start tightening their belts. Everything gets hideous when that gets too high, and this is why it's got to be done. Yes, it's going to be hideously painful, but let's have hideous pain for a year to 18 months rather than 10 years of hell in recession. This is what these governments are battling with at the moment. So can't stress it enough. I stress it every day. That is going to drive this. Forget your indicators, forget everything. That's what's going to make this go up or down. If it comes out as expected, we should see some decent movement, but they're going to not get that until you get some CPI figures to back it up. So, don't know at the moment. Can't really tell with that. Oh, wrong one. And CAD Yen, obviously, even if we get the positive rates, I'd still be looking for shorts. So if we get a 150 ADR on that in that propulsion gap, I'd be interested in shorting that. Swiss yen, again, same thing. All the yens, I kind of like them as shorts at the moment. But we're still not seeing massive strength, but we are not seeing massive weakness, and that is the key here. Is not necessarily that we are going to power up really hard on the yen. We're not just getting that weakness we've been used to for the last year on the yen. So more of that, more of potentially slow grind, but we will see some decent movements to the downside coming on it as well. So shorts, that's almost set up. 4 hour, we've got the extension on the RSI. We're sitting in the propulsion gap right now. So we had a 4-hour accumulation there. We broke, and then we accumulated, we broke, and we just went from there. So this is where the sellers stepped in. So sell, build a book, sell, rejection at the propulsion. So bearish engulfing, just there's your short. Drop down, just had the alert. Nice looking short on Swiss yen. Euro odd. Again, euro sideways. So I'm still like that. I'm still like that with euro. I've been like that for 2 years, and I'm now like that with euro. So I'd rather be longing it than shorting it at the moment. Not going to obviously long it at range high. So I'm waiting for pullbacks on that one. Euro CAD is off the charts as well. Obviously, this is going to have its decision made this afternoon as to which way this one's going. Euro Swiss completely sideways, can't really do anything with it. Euro Pound sideways, can't really do anything with it. Euro Yen pretty sideways, but slightly more bearish. Euro New Zealand, that's coming down obviously against New Zealand. You know, all these euros, there's no strength, no real strength anywhere there at the moment. But I would, of all of these, I would be looking for longs on everything at the moment. Apart from potentially Euro Yen and Euro US, those are the two that I would be more bearish on. So RSI extensions to the upside for Euro US dollar and Euro Yen upside as well. So looking at the hourlies on them, your entry was in here, you're still in it at the moment. Nice propulsion rejection there. And Euro US dollar, your entry was last week up there. So yeah, like those as shorts. But everything else on the euro side, obviously at the moment, next week I haven't got a clue, no clue. Next week's all change next week. So right now, if you're looking to get into any of those would be the biases I'd be looking for. Same with the pound. Shorts on everything pound. We've had a really tight reversal alert on the 4-hour. This thing's just been very, very, very grindy with the odd drop. It's obviously been beating the Aussie because the Aussie, as we know, has been being smashed into the floor at the minute. But equally, the pound is a short, so we're running a short against a short here, which again makes it very neutral range-bound mover. We are sitting up at the range highs at the moment. We have just had interest rate increases on the Aussie, and we've obviously had that GDP miss. So it's difficult to call whether this is going to come down or not from where it is. It's not the best thing to trade out there at the moment, the pound odd, I don't think. Pound CAD, again, I would anticipate a drop. So I think we just had a reversal alert on that this morning, yesterday. So structure's broken yesterday to the downside. No follow through during Asia, which you would expect because there's nothing Asian in there. We're pulling back at the moment. So potentially start looking for shorts on this one, on the pullback, M5. So you drop down to M5, take reversal alerts. There's quite a long way to go if you look at the hourly on this one. There's obviously there's yesterday's high. We've got quite a long area here where the reversal alert happens, where the structure break happened. Anywhere in there really would be somewhere you can short it from. So you're kind of getting into an area of setups now. And then at 3 o'clock this afternoon, assuming we get that positive rate announcement, that's when it's going to take off. So you can kind of get yourself into a pound CAD ready. So if you want to stick the EA on, and just say, take the next 5-minute reversal alert, get you into a position. This is obviously all in anticipation of the figures coming out at 4.25 or higher. If it comes out at 4, you're going to immediately go straight into drawdown, and this thing's going to fly out of yesterday's high. It's interest rates. You're trading around news. You're trading basically the volatility there. DAX stopped out on DAX. So it wasn't only a little one this morning. But yeah, that one's I kind of was I said as soon as I saw that candle, that's kind of what I anticipated happening this morning. Tricky. Buyers are buying up the propulsion gap though, so second attempts may work. We've got lots of highs from yesterday to come up and target. Don't forget yesterday on the DAX, we've got obviously there's your open and there's your close. So if you stick our Mr. Fib on, look at potentially a 50% pullback is also a support resistance area. And then obviously where the move started is around about 61.8. So I can quite easily see it trading up into this area before this is what you have to be thinking, right? There's today we've got 3 outcomes. I'm on the pound, by the way. On any day, there is only 3 outcomes possible, isn't there? An inside bar, a bullish bar, or a bearish bar. Yeah, there's only 3 outcomes. So you have to ask yourself what normally happens after we've had a down day and we get a down day continuation. We quite often get a pullback into the previous day's range, and then we push out of yesterday's low and make a new bear bar. So if a bear bar is going to form today like that, what's going to happen? It's going to push up into this range from this day, and then it's going to reject, and the sellers are going to take control because they took control that day, they took control that day. Obviously, what's happened yesterday has got nothing necessarily to do with today, but typically we see a pullback and drop. So when you drop down onto your lower time frames, where are we going to go? If we're going to pull back into this down candle here, yeah, and we've opened here, at the moment, the candle is pushing back up into this down day. And if it's going to push up and then close below yesterday's low to pull a bear bar in, like that, where are we going to push up to? Typically somewhere around about 50 to 60, 180, the usual fib. But it's never that, and it's never that. It's always somewhere around here before we drop. So in this move, that's where I'm interested. Somewhere around this low here, this low and high here, or that propulsion gap. And then out of the lows. That's the trade I'll be taking this afternoon on futures in the New York session. So yeah, so just while I just was watching the DAX on my other monitor, see what I was doing. Yeah, always bear that in mind every day. Your job is to think, where are we going next? Forget all this. If we're going to go up today or down today, where are we going? So right now we're going up. So if we're going to go down, you need to be selling there. Yeah. If we're going up, you need to wait for this to pull back and then take a break high to come and challenge those highs. You need to have some kind of thoughts about where it's going and then follow the price action. Yeah. Whenever you're looking at it, thinking, right, you should be asking yourself, when a candle closes, right, if you are bullish, because you don't know whether that is going to be bullish or bearish next, if you are bullish, where are you headed? There. If you're not going to be bullish, where are you headed? There. Yeah. So if you're going to short this push on that little double top with a stop up there, that's where you're getting out. You just got to be thinking in the future. Visualize. Paint the candlesticks in if you need to with a pen. It's obviously not necessarily going to do that. It's going to muck about for 3 hours, annoy you, and then it'll get there. Visualization. It's got to be thinking, where are you going? Pound CAD. Yeah, so obviously visualization on this. Positive CAD rates, reversal alert, ADR. Negative CAD rates, pushing out of yesterday's high, ADR. Pick one. That's your job. Visualization is going to be at 3 o'clock. It's going to do that or that. 50-50 shot. Pound Swiss. We've just had the reversal on the Pound Swiss, but again, Pound Swiss, sideways mess. These are very similar to the Euros, isn't it? It's all very similar to the Euros at the moment. The fiscal policy on the pound has been put in place. The market was not impressed or unimpressed. It's just not interested. Fundamentals are that way. Housing, we had our housing figures this morning. Our housing market has slowed down dramatically. So month on month, 2.3%. The housing market is slowing down. This is the first signs of recession kicking in. The next thing you'll see is, because housing prices are slowing down, less people are buying houses. What have you got to do if you want to sell your house? You're going to sell it cheaper. You've got to entice people to buy. So when the house prices, start to drop, it just becomes a spiral. And this is also caused by people needing to sell because they can't afford mortgages now. Mortgages are doubling in the UK. Yeah, my mortgage is £1,600 a month. Yeah, I overpay it, but my base mortgage I have to pay a month is £1,600. If I came out of my fixed rate now, my mortgage would jump up to £2,500. Nearly £1,000 a month I've got to find. Can you imagine being on a fixed salary? Yeah, and all of a sudden, them going, you need another £1,000 a month. Well, I haven't got £1,000 a month. I don't earn that. You go to your boss. Your boss goes, sorry, times are hard. Can't get it. This is what recession is. So what do you got to do? Sell your house, right? You put it on the market for what you need or want from it. Nobody's interested. You drop it by 10. 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 You sell it and you buy something cheaper. That is what is exactly starting to happen now. And this gets worse. We're at the start of this. Yeah, people don't know what's coming. They really don't. It's just, this is the start of hell. Interest rates are going to go up until spring next year. We've got another 6 months of interest rate rises across the world. And that's assuming they get on top of inflation. Yeah, if they don't get on top of inflation, this thing could go on for another year. We just don't know. And this is assuming we don't have a tsunami, another world war, or alien invasion, Sorry, I don't want to be the doom bringer, but it ain't looking good, is it? Pound Swiss, from an FX perspective, this thing's just not going anywhere at the moment. Moving averages are just sitting there dancing with each other. Your guess is as good as mine. New Zealand yen RSI high. So we know New Zealand yen is an ADR, is RSI extension on the hourly. We are more extended, 75. We just taken out the highs. So there's the liquidity gone. So bearish move potentially could be starting there. Pound Swiss, pound yen. Again, same thing, sideways. Pound is holding up a little bit better against the yen, but pound New Zealand, there's just nothing you can do with the pound at the moment. I'd be wanting to sell it against the US dollar, definitely. That's the reversal that I'll be waiting for. But look at the break. I mean, it's not very convincing, is it? Yeah. There's your low. There's your market structure break by that much. And now we're pushing back up. It's just, the pound is, it's just a very, very tricky thing at the moment. I can't see it going anywhere but down, but it's not. So I need to see it break before I get interested in it at the moment. Against the US dollar, however, obviously, I would anticipate the US dollar strength is starting to kick in. We can see it in the indices. We can see it in the indices. The indices are coming down. The US dollar is starting to gain traction. That's your reverse alert on the 4 hour. That's your first signs that we are getting some traction on this one. So I'd be looking for shorts on US dollar. So any kind of pullbacks on the hourlies. I mean, even lower timeframes if you wanted to. You had a little bit there, but any kind of extensions, any ADR hits to the upside, looking for shorts. New Zealand, again, New Zealand is the only one we're not getting interest rates on. Where are we? Next week. So New Zealand is February. So obviously we can see, you can't see this, can you? A massive, massive monitor. So we've got the pound December the 15th, US dollar December the 14th, euro the 15th. We've just had the Aussie. We've got the Swiss on December the 15th. We've got the CAD this today. And then Japan is December the 20th. New Zealand is not until February. So New Zealand is the only one we're not getting the interest rates on until February. So it's kind of, you have to assume business as usual. We are getting CPI figures, obviously, and if those inflation figures are green, this thing's going to carry on going. So yeah, New Zealand dollar's on an absolute run at the minute, and there's nothing really to stop it apart from obviously everybody else's interest rates. Don't forget, every single currency pair you trade is a two-horse race. Yeah, at the moment, New Zealand dollar CAD is strong because New Zealand is strong and CAD is weak. If these interest rate figures come out with a 0.25 increase today on the Canadian dollar, that's going to completely change. So although we've got no interest rates on the CAD due until February, everybody else's are coming out next week. So all these CAD pairs, these New Zealand pairs, where they are right now, there is the possibility, if everybody else has a hit on interest rates where we get an expected or higher than expected, everything against the New Zealand dollar is going to start to come down, isn't it? So we're seeing signs of weakness trickling in across the board on the New Zealand at the moment, apart from obviously Aussie New Zealand, because the Aussie's in a mess. But so these are all, I think, at the point where we should start looking for profit take moves to kick in, because the market is going to start factoring money into all these other currencies, assuming they get decent numbers, and then we'll start the next cycle. And the next cycle obviously will be to pull back into the monthlies and the quarterlies and start to drop. But yeah, we're in times where things are just doing what the hell they like, because countries are, they're out for themselves at the moment. They're looking after number one, as they should rightly do. We can't really tell. So but next week is obviously going to be the key trigger for these. The Swiss is going to be interesting next week. The rate forecast on the Swissy is and as expected, and obviously as you can see, the Swiss have been they don't increase their interest rates the same way as we do. Everybody else is usually monthly, potentially 6 weekly. The New Zealand's and the Swiss are totally out of whack. The SMB, it's this banking is their thing. It's not in their interest to keep mucking about. They need stability in the banking system, so they don't do much with rates, only when it's necessary. So this is where we had the initial Swiss strength starting. This was a complete shock. The forecast was up to 0.5. I'm not sure what the forecast is from the SNB at the moment. Not sure where. I'm not familiar with the SNB site. Oh my God. Southern foreign language. There's not a lot of news, is there, really, either? Basically. Yeah, I'm not actually sure what the forecast is. We'll find out. But they're very, very tight-lipped, always very tight-lipped. So we're going to get their monetary policy, their policy rate, and obviously the press conference afterwards. So I get the feeling we'll see some strength on the Swissy as well. So where we've had the reversal out on the 4 hour there, and we've retested and gone into a bit of an accumulation, I think this is probably a good time to start selling New Zealand Swiss as well. New Zealand yen, obviously, same thing with that. We've got the range highs. We're up there now. Good opportunity for shorts. We've already covered that one. And New Zealand US, like shorts, based on US strength. But again, all hinging on next week. So, you know, right now, I'd be happy to hit the short button, but I'd want to have a stop up there. And I wouldn't anticipate necessarily either hitting that or getting anywhere near any target, because the likelihood is we're not going to want to do much until we know next week what's happening. So I think we're going to get a little bit range bound after the CAD figures today. US CAD, obviously, lovely push to the upside. This is a nice long. I got into it long and I got out of it somewhere. I can't remember where I got out of the US dollar CAD. But yeah, it's pushing up nicely. It's very erratic, but that's because of US dollar news. So we're sitting up here where we should see the sellers starting to kick in if they are there. And we've got the CAD rates, which in theory will be driving this one back down again. So this is a good spot to start with a sell. We're extended on the 4 hour. We were extended on the hourly yesterday, and we've got divergence at the moment. Oh, no, we haven't. Where's it from? There. Yeah, we have. Yes, we've got divergence, bearish divergence at the moment, indicating that this is full strength and we should be starting to move down. So it looks like this is just a bit of a manipulation ahead of the news. But again, where this goes at 3 o'clock is entirely down to whether that's a green or a red number or a black number. So can't really do anything with that unless you're going to get into a scalp short to just play it out today towards an ADR figure either way. US dollar Swiss sideways at the moment since the US dollar tanked, and obviously we got the index pump with sideways doing nothing. Again, a lot of this stuff is so sideways at the moment because the market's just really not interested in anything long term. It's just unless there's really, really, really amazing fundamentals. But ahead of all the interest rates next week, we're just sitting sideways. So range lows, longs, range highs, shorts. But this is going to be an interesting one. This is why I'm kind of not trading this thing at the moment. This is Swiss power and US dollar weakness. When you get negative or positive news on these two, you get ridiculously fast, hard moves. So, you know, you kind of get in and hold on, and you sit there bubbling away, waiting, and then bang, that's it. You just stay in it. At the moment, obviously, we're just sitting bubbling, and next week we've got 2 news items that could explode this in. You know, you could get both directions. You get explosion to the upside, and then it explodes down the downside the next day. What day are they out? Are they released? So Thursday next week. Yeah, so we've got Wednesday, we've got US dollar going mental, and then the next day we've got Swiss franc going mental. So yeah, you have to treat every day. It's scalping week. Next week is scalping week. Short-term scalping, no swings. Just you're in, you wait for the announcement, you make money or you don't. You wait for the next one, you wait money. It's just like shoot, reload, shoot, reload, shoot, reload. You're either going to come out up or down. But if you're going to limit your risk, your downside, do not limit your upside. Yeah, we know what happens. Yeah, if you got in short there and you went for a 1-to-1, you're stupid. Yeah, you get in with a position, you put a stop in there, you do not put a TP in it. You let that thing go wherever it's going. And you don't stop until there's another news event coming out that could possibly get you out of the position. Next week is the end of my trading year. Yes. That's exactly the way to look at it. So next week, then take the following week off. I will be. I'm not doing. I don't know what I'm going to do with live rooms yet. It depends what I really want to get the EA finalized. I didn't get much time to do back testing yesterday. I did a little bit. I did an hour. I had so much other stuff going on yesterday, and obviously I passed the evaluations yesterday, and I had to trade my futures account yesterday, so I just didn't get time to do anything. So today I've put the whole day aside for concentrating on that back testing on the new EA and picking what I want to demonstrate in the video about the strategy, so that everybody's got all the information on how they want it to trade, because it can trade in some very, very different ways. I'll go in, actually, what I'll do is I'll finish this up and I'll quickly show you what I did yesterday, just to demonstrate, you know, what it's capable of. But So yeah, US dollar Swiss, as I say, we're sitting here in a holding pattern, ready to land, and then we're going to take off. Don't know where we're going, but next Tuesday you will. US dollar yen again. Now a lot of people are calling this as a long, which I kind of agree with. I say a lot of people, institutions, and to be honest, the fundamentals point that way as well. But they only point that way until Japan go sod off. Yeah. So although fundamentally I think we've got a good chance of this powering up, I don't think it's going to get very far. So if you look at how long it's taken to get from 150 down to where we are now. So this was the intervention and second intervention and drop. We intervened, the market got shell shocked. We intervened and the market was like, yeah, all right. You know, it's like getting a slap in the face and then getting slapped in the face again. It's like, oh, okay, I understand. We can't push you past 150. If we get positive news on the US, we're obviously going to get a move against the yen, but this thing's going to push back quite hard against that, I think. The question for the Japanese is, would they be comfortable letting us get back here? Fundamentals point to it, but human intervention doesn't. So it's a very difficult one to call. I'm looking for shorts on everything against the yen, but the US yen I wouldn't be quite as short on. So again, it's one of those I would probably steer clear of, because I think you'll probably find you're going to get into quite a choppy range with it, and it's going to be driven mainly by the US. So I like it long at the moment from where it is. You know, and a lot of the 200 moving average, people are going, look how well the 200 moving average works. And then I'll be saying, look how crap the 200 moving average was there, and how crap it was there, and how much it just flip-flopped around it there and it didn't work, and you just, nothing to do with it. But yeah, obviously it's a long-term long, and but you get to a point fundamentally where one country just cannot sustain it anymore. Yeah, they have to do business, they have to survive, and they have to do something about it. We've had this, so it's very difficult to pick a long-term direction on it. At the moment, we've broken down, but that's mainly on US dollar weakness as well as the intervention from the Japanese. So if the US is going to strengthen, are the Japanese going to intervene again? There's just too many question marks over this one. You would expect now a pullback drop, wouldn't you, to start coming and undoing some of this. But the Japanese economy is just not in a situation to be that strong at the moment. So it's a really difficult one to call from a long-term perspective. So I think you need to be looking, obviously, on the hourly RSIs. I think you're going to get push and pull. But it's very hard to fight this at the moment and say, I want to be long. I'm long on the US dollar against everything else, but this I'm kind of just unable to make a decision on. So it's off my radar. But right now, we're sitting here. And don't forget, there is every possibility we're going to get negative numbers on the US next week. And if we do, this thing is going to continue this way. So, you know, when we talk about scorecarding, where the institutions are scorecarding fundamentals to give a positive, neutral, or negative bias on something, this is next week is where this all flips. So where you might have a very strong sell on this right now, next week this will turn into a medium buy, just purely on the US dollar figures, because sentiment will change in cotton, all sorts of stuff will change that will just drive the market in the opposite direction. And that's when trends come to an end, which is what we had here. Trends come to an end because there's intervention. And at the same time as intervention, we just happen to get negative news on the US. And it's just the perfect storm. And this is what we're seeing on a lot of these pairs, as we know. The perfect storm just suddenly coming out of nowhere. Everything falling into alignment in the opposite direction that we've had and we've been used to for a year. Look at the S&P. We've been very happily trading the S&P long for a long time. Not anymore. Yeah. This is where we have to pay attention to the fundamentals from a long-term bias. Any time frame below the hourly, and to be honest, sometimes a lot of the time before hourly, doesn't matter, does it? But if you're looking for long-term bias to help you in your strategy and your trading, you've got to pay attention to the fundamentals because that's what it is. So yeah, that's tricky. I don't quite know what to do with that one. Ladder, I'm done for this week. Don't want to anymore. Don't want to anymore. I don't want to anymore. And with all the stuff going on next week, I'd rather sit on the sidelines and watch the madness. Yeah. Low risk scalping. There we go. So we got the break in the end. We did get the buyers stepped in the propulsion gap. So we're up in the 50s to 61.8s. Are we going to get the down day? And also the indices are going to be massively affected next week as well. Don't forget, we've got the euro rates, which is going to affect the DAX hugely. And we've got FOMC, which is going to affect the US indices hugely as well. So change across the board next week. We've got oil this afternoon as well, 3:30. So if you're trading oil, don't forget Wednesdays, every Wednesday, 3:30, you've got your inventories. So you need to be aware of that for oil this afternoon if you're in oil. Whoops. So yeah, so that's it on everything at the minute. That's annoying. I got stopped out again. You know, with the EA that's managing these positions for me, I got stopped out because of the trailer distance. If I'd have had twice the trailer distance, I would be sitting in a lovely profit now. Other days, that's not the right thing to do. There literally is no right and wrong, which is why I'm doing all this testing. So just to cover what I've got going on with the testing. So I've got a set file here, for example. I'm testing these visually now. So basically, I've done all the back testing. You can go now if you're not interested in this bit. I will be doing a video in all of this anyway. So come on, spreadsheet, wake up. So I've got all this back testing done on all these pairs, on all the indices, the Dow, the Nasdaq, and the DAX. So lots and lots of tests, multiple tests with multiple different strategies, using trailers, using percentage risk, using dollar risk, using different time periods, using stops, using break evens, using percentage exits, using, you know, I've never done so much testing in my life. But these results, obviously, you get very different results. You get some very high drawdowns, but forget that figure. Try to ignore that figure, right? Because this drawdown percentage is not, if you're going to be trading your own account, fine, look at it. But if you're going to be trading a prop account, that's not important. That's important. The drawdown amount in dollars. You have a drawdown amount in dollars on your account. Yeah, 11 grand or something, or whatever it is. That's what you are interested in. And the return you're going to get based on that drawdown. Yeah. So this is a 2-year test. We returned 430 odd thousand on this test. We drew down by 118 grand. Again, I don't care. I'll give you 118 grand if you're getting half a mil. Not a problem at all. But it's how you get it. And this is the thing that is going to be different for everybody. So this actual set file here, if we run a test on this set file, there's different ways you can achieve a result. Let me just check this one. So it's 100, 1,250. 250, 10%, 250 risk. Right. So I've reduced the risk down to $250 on it. This test was performed on $1,000 risk. So it's a different amount. So you're going to get different figures here. But the way that it trades is exactly the same. So if you watch this on a visual, you'll see that this strategy will, if you're watching this strategy and you want to pass a prop firm with this strategy, it's going to be hideous. You're going to hate it, and it's going to drive you nuts because it stops out at break even around 70% of the time. So you will be getting into trades every day on this, and the vast majority of those days you will get nothing. You'll get a stop. You get a stop out, right? Or you'll get a very small loss on your account. You might lose 500, 250, you might lose $1,000. And then you'll stop out for 20p, 50p, whatever. So most of the days are going to be like that. This set file is designed from what I call, I'm going to nickname a home run strategy. Okay, what this set file is designed to do is take advantage of the days like we had yesterday, where it goes out the gates and it just doesn't stop and carries on maybe into tomorrow, right? The big runners. So this has got 100-point stop on it, but it's got a 10-point break even. So what we're looking at with the range is, as soon as we break that range and get to about there, we go there. And if this thing goes like that, we're going to make a fortune, 10% profit or something on our account. If it doesn't, it's going to stop us out for nothing. And then if it goes, we're going to be frustrated. But that's what this strategy is. Okay, so it's kind of what I call a home run strategy. So if I speed this up, you'll see what I mean. So those positions there, what did we get out of that? Nothing. We got a small loss of $500 odd. Oops, wrong one. $500 loss. Okay. Let's look at the next range. Okay. So you can see the stop. Yeah. The stop is small. So there's our entry. There's our stop. Really, really, really tight stop, which will break even very, 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 very quickly. So it either goes or it doesn't. Yeah. Didn't go, didn't go. We have got one sell on still, which again stopped out at break even. So you had all that profit, but you didn't get it because it broke even, right? Because what did we get? We got a rotation day. Yeah, this is not a rotation in EA strategy. It is a breakout runner strategy. So what did we get there? A little bit more loss and break evens. Same. A little bit more loss. Yeah. This is day 4. Break evens. A little bit of profit. Not a lot. Right. Okay. We've got one runner there. Break even. Again. So that's what it does, right? So this is what I would put on an account that is funded, that has been traded up to a certain level. So this set file is going to make me a lot of money over a period of a year. But it's something I'm never going to look at. It's just going to sit there and it's going to make money. And the way it's going to make money is by making massive home run wins, right? So we will let it run and I'll show you a home run. And you're going to get them when we get these days. Right, there you go. There's one. 10.5. Yeah, didn't look like it was working very well, did it? But bang, all of a sudden now we've made $3,700. Okay, we started trading on the 1st of April. We're now sitting on the 15th. So it's been 2 weeks. We haven't made any money. We've just banked our mortgage today. Thank you very much. Okay, so there's your home run. And what it is basically is, this is exactly what this set file is designed to capture. We get our opening range and we're like, we're not looking back. Bang, we're out, we're gone. This will happen roughly every month to 6 weeks. You'll get one of these, but you'll get a few that will be similar to this, but not quite as massive. The testing that I haven't done, so what I'm producing is a document based on this. Again, this is the next level. This is my final step of testing. So this set file, this is what the profit curve looks like. So it generates just under 400 grand with home runs, right? Further testing, see what the set file does without a 10% profit target. So the next test that I'll be producing on this particular set file will be to take away the 10% profit target, because if you look at what happened after I got out, we're still going. Yeah, day 2, right? Missed a further 10% profit. So this needs to be tested. Still going, right? So there's further testing and further development to do on this. And there's only me. I've already done approximately 250,000 back tests. And as I said, 90% of them are profitable. So I've still got further development to do on it. But to start with, obviously, I need to develop, pick the ones which are going to work. If you want to pass a prop firm, there's going to be a different set file to if you want to make an absolute fortune. Right? And so this is that sort of strategy. It's going to sit here. It's going to stop out a lot. It's managing your risk. It's not going to make you a fortune all the time, but it's managing your risk. It's making sure you're also not losing a fortune. Look at this. We've gone from 3,700 down to 390. So we've lost 3,000. We've got a $10,000 drawdown on a 100K account. If you go over a 250K account, you've got way more than that, right? So it's just biding its time, waiting for these home runs. You get 2 home runs a month, or whatever. There you go. There's another one. There's another home run. 8.1% we're sitting in at the moment. Banked it at 5.7. Home run number 2. Completely got rid of all of that. Now we're waiting for our next home run. 2 home runs a month is enough to pay your mortgage and live on. I've back tested this. This one set file on one instrument, don't forget, this runs on 3 instruments. This is just one instrument out of 3. We're not even talking about the New York market yet. This is just the DAX. Just one set file as well. Don't forget, I've got 8,000 set files that are profitable. Right? So, I've got to go through this process of testing to find out what to do. So there's another home run hit, 6.9% so far, closed out at 7.5. So there's 2 home runs in a month. We're now 8.5 grand. 1st of April to 1st of May. So that's made you 8.5 grand this month. Are you happy with that? If so, this is your set file. Never hit drawdown. It's gone nowhere near drawdown limits, but it's produced 8.5 grand. It's passed a prop firm and stage 2 of a prop firm evaluation. So in 1 month, it's funded you. Done. And this is one set file out of 350 of these, which you could choose from. 313 of these 364 passed evaluation. And the reason we got 30 of them fail is because of that. If you run this with $500, because this has been run on a 50K account, if you run that with a $500 risk, it does need all the others pass as well. It passes 100% every variation. So every robustness test is a win. So that's what this set file does. There's other set files which will have stops. Instead of placing a stop tight, it will place a stop at opposite end of range, which is what you saw me trade today. So the one that's running here, why is that cancelled off? We haven't triggered a short, have we? Cancelled. Oh yeah, we're 1.5 hours in, aren't we? Sorry, yeah. Yes, it's just cancelled that off. So obviously the entry and the stop was there. Or rather there. So that's short. We're using the opposite end of the range. So, this set file, if I'd have been running without on a different set file, which hadn't adjusted stops, remember I got stopped out about there for a bit of a loss. If I'd have been running the original set file with a different setting where we don't change that and we trail by 600 pips, this would have made a profit today. So they're all going to make a profit, but they will all make a different profit. And you can't tell what condition is going to be met every day. So you've just got to pick one and go with it. My plan is to pick 3 different types of set file. I'm going to have a home run set file. I'm going to have a high aggression set file, and I'm going to have a really tight stop set file. So a high risk, not high risk, high reward, high risk lot size with a wide stop. So any days that do something like that, I will benefit from. Any days that do something like this with the home run strategy, it will fail. So if I run 3 different prop accounts with 3 different set files, to cope with all the different conditions that we find that happens on the DAX Open and the Dow and the NASDAQ Open. Every day, one of those in likelihood will make money, while the others are just managing risk and taking small losses. So between the three of them, they will all make money in a month, but at different times. So it's diversification of strategy. So this is why I'm doing this this stage of testing, which is to find out, if you want to pass a prop firm, this will do it, but it's not the best one, I don't think, to trade to pass with, because you can pass a prop firm in 5 days. Don't forget, on a E8 you can pass it in a day. But on my Forex funds, for example, you can pass it in 5 days. So I want one that gets you more profit faster. So it's higher risk. Like the one I've passed with, this account passed yesterday because it was running high risk, high reward. Yeah, it did $4,000 in a session. So, but it's a different set file to this one. So, I need to get all this data together, because this is what people are going to want to know is, what's the best set file? It's what I get asked all the time. I don't know. I need the answers, obviously, because this thing has got so many different variations that make a profit. There's a runner, got a little home run there. It was only a 3.2, but still a little home run. We could have taken a lot more profit. This is on a home run now. Look, got to sell. Only one position, unfortunately. But yeah, there's another one, 2.4. But don't forget, you need 8% to pass a prop account. So, these little 1s and 2s and 3s you get, they're all going to add up. There you go, a little home run there, another one there. That's annoying. That's another situation I need to look at. Potential, this isn't going to be now, because this is the same amount of testing and development that I've done to get to this stage again. But we are flat long. I need to build something in to take advantage of that. I'm flat long with losses. I need to get in again if it breaks again, because I missed all that. Missed that one because we chopped at the open, and then at the just before the hour and a half was up, bang, we went. Missed it. So there'll be ways to take advantage of this, but again, it's all got to be thoroughly back tested. So this would be stage 2 development of the EA, adding in a second entry option, which you will be able to turn on and off to get you into these situations as well. But yeah, so that's where I am. That's what I'm doing, and I'd like to get this out before Christmas and finished. So hence me wanting to stop trading at the moment, because I just want to get this developed. There you go. There's another one, 6.9, 10.1. Now again, why close out at 10.1? Could have taken 11.5, 12. I don't know yet. Let's see where it goes. Yeah, would have stopped out, I reckon. You'd have stopped out on the trailer from there, which was 1,000. Yeah, stopped out on the trailer. But I would have stopped out on the trailer with maybe 11 point something instead of 10 point something. We're now sitting at 13 grand profit. But so that's the step now, is the visual testing. But if I take that off a visual, I'll show you the graph where we end up. So this is doing the same trades, obviously a lot quicker because it's not visual backtesting. So that's where we got to. Oh no, next one. That one, that one. So that's roughly where we were on visual. Yeah, bad run, home run, little bad run, home run, home run, another one, another one, another one, another one, another one. We're on up to 84 grand now, guys. Nearly 100. Doubled the account. This is running on 100K. We've just doubled the account. This is not taking excessive risks. This is risking $250 a trade. This is nothing dangerous at all. You are going to get drawdown. You're going to get, we've seen the drawdown. Yeah. This is on $1,000 account. But you're going to see when we get to the end of this, we're going to have 71 grand of drawdown. right? Which sounds like a lot, but when you pass a prop firm challenge and you get your funded account, your max drawdown caps at your funding level. So I've just passed this 50k account. When I get to 52.5 grand, my max drawdown caps at 50. So if I trade my account up to 200 grand and it draws down by 70, that's not a problem. I'm not going to fail the prop because I'm allowed to draw down if I get up to 200 grand by $150,000. So this is what I would suggest is probably your, when you're funded set file, it's going to give you those big paydays. Yeah. So here you go. So you've got 73 grand of drawdown. We made 314 grand in 2 years. It's 150 grand a year with 35 grand a year drawdown. So if you can get a 250k account, it's not going to bother you. But what you are going to find difficult psychologically is sitting through 5 or 6 days of making no money at all, waiting for what happened to me yesterday. Yeah, oh, hold on. You're going to be waiting for that. It's not going to happen every day. You're going to get so many days that aren't like it. So I'm putting together a document which is for every pair, which is going to give us a set file that and you know, this is what this is going to do. This is what you're going to see. This is what you're going to experience. You pick what's best for you. But if you want to muck about and you want to go and do all this yourself, do it. But you've seen how long I've been doing this now. Yeah. My PC has been running pretty much 24/7 on this for weeks at tick level with tick data over years. So, you know, I'm happy to put it out there with all the inputs, but I want to be able to provide something that's going to be a little bit less confusing. So a bit of low risk scalps interview for Christmas fund. If you discovered something highly consistently profitable, then would you announce it publicly? Yeah, why not? This is what traders do every day. It's not hiding. It's not a secret strategy. This is the opening range breakout. This is the ORB. This is not this strategy has been around for decades. I've just automated it in a way that allows me to develop it further and use it to pass prop. That's what I want it for myself. But you can manually trade this right now. All you're doing is you're taking breakouts at the 5, 10, and 15-minute range, and then you're trading your stops. All I've got is the data as to, depending on what your stop is, what your trailer is, and what your break-evens are, what results you're going to get. And as you can see, pretty much every single one of them is going to make you an absolute fortune. Doesn't matter what you use. Sometimes you're going to get stopped out, sometimes you aren't. And this is what I was talking about. We spoke for hours yesterday, didn't we, about how the market is totally random and it doesn't give a monkey's whether you press buy or sell. How you manage to trade when you're in it is how you make your money. How much you make is totally down to the market. You have no control over that. The only thing you can do is press the close button. And whether you press it with a 1,000 pip trailer, an 850 trailer, or a 700 trailer, or a 550 trailer, doesn't matter. Worst case scenario, you only made 76 grand. Oh, crap. That's only 35 grand a year on one instrument. What a shame. Bad, isn't it? But the problem is people can't do this psychologically because you get an itchy trigger finger. The whole idea of this EA is to take you out of the equation. So your finger is not itchy, and you stick this on a VPS and you pass a prop with it and you walk away and you put it on your prop and you go and do something else with the kids. It's not going to make you a millionaire, but it will pay your mortgage. That's you know, and that's the idea. But human beings aren't able to action this because you'll see a bearish engulfing suddenly after you've had 2 losses on the opening range, and you'll take it and that will make you another 1% loss. And now all of a sudden you're trading 2% and you're thinking, oh my God, I've got to get that back. And you'll hit the button, you'll blow your account. If you hadn't have touched it, this thing would have passed it. This is a problem. It's a problem everybody has, isn't it? Does it not make sense to run the different strategies with lower risk to have like a portfolio that works on both occasions? Yeah, that's another option. So you could run 2 versions of the EA on the same account with different, and I'm doing this at the moment, yeah? So if you look at my VPS at the minute, I'm actually doing this in a slightly different way. So you could run 2 versions of the same instrument with different settings of the EA. One with one going for the home run and one going for the quick pass, right? The danger is obviously they both get whipsawed. Look at this, yeah? We thought that was working, didn't we? And where did I say we were going to look at? Oh my God, why don't I ever listen to myself? Where did I say we were going to come back from, guys? Yeah. But I'm not trading today. I'm 100% focused on getting this thing sorted. But yeah, you run the danger of on a whippy day. So if it whips up, whips down, whips up, whips down, takes out the opening range highs and lows, you're going to get a double loss. There's nothing you can do about that. Other days, you're going to get the payday, the fast payday, and the home run on the same day, and you're just going to clear up. You're going to go, I've got to turn this thing off because I've just paid the mortgage for the next 3 months and the car payments, and I can buy a holiday. Yeah, but you're going to have to wait 3 weeks for that day to arrive. So there is that danger. And the danger, obviously, with prop is you have got a limit. So you've got to really be careful with your risk per trade. And you can test all of this. You can test it. The point of the backtester is you can test all of this. What I'm doing at the moment on the NAS is the NAS is running a tight break-even, tight trailer. For the NAS, 40 points on the NAS is a tight trailer. And it's running a tight break-even. Yeah. And it's looking for a 7% target. The Dow is running a massive 130-point trailer with a 40-point break even. So this one is running home run. This one is running quick. Yeah, so you can do with the US indices, obviously, these guys move fairly similarly. So if you get an opening range like that, yeah, where are we? Somewhere around there. So like that, yeah. You can see the Dow broke the opening range high. And this happened to me yesterday. The Dow broke the opening range high and made a loss yesterday. The NASDAQ never touched the opening range high and flew out the bottom. So I made money on both of these yesterday. But this one, I actually made a loss as well as a win. But this one was just a win. So this is the beauty of the US indices. You have divergence on these guys. So if they both go for a home run on at the open, happy days. One of them doesn't, so what? One of them could chop. The other one could go nuts. Don't forget, this is monitoring tech stocks. This is monitoring totally different sectors. Tech has bad news. This thing's going to go nuts. The Dow won't. So this is your way of diversification, I think. DAX, yes, you could run 2 versions. But with the US indices, I think you're better off running one type on here and the other type on there. You're going to get the days where they're both going to work. And yeah, I mean, those days you're going to be walking away with 5 to 10% profit, aren't you? But you're going to get days where you're going to get chopped on both of them and you're going to lose 2%, 1%, 3%, 5%. You know, it's going to go up and down a lot. And you're going to blow accounts as well. You know, look at the profit curve. Moving average. What am I doing? Sorry, wrong one. Look at the profit curve. Yeah, if you put the EA on your funded account, on your evaluation account there is a possibility it just won't work and it will blow it before it gets to there because you won't get the home run or you won't get whatever. And all strategies have these periods. All the set files have got some period of drawdown, but there are set files that have very, very little drawdown, 11%. Only makes 65 grand. But only has 11%. So it only drew down by 16. So if you half your risk to 250, that will drop below 10 grand. That would never, ever hit a drawdown. But it might take longer than 30 days to pass. And that's the problem. You've got a 30-day limit to pass. On stage 1, stage 2, you got 60. So that's not an issue. It's never, I don't think any of these have had a drawdown period, a stagnation period of 2 months. Again, I haven't fully tested that either, stagnation. So yeah, I mean, there's other set files which will do different things for you. So that's my testing running forward from here. I'm totally happy with the profitability. And as I said, you know, out of 8,000, I've got 7,500 profitable variations. So it's a case of the problem, it's a nice problem. The problem is what set file do you use? And I think this is personal preference. So, but I will be obviously working on it. But that's my focus, is try and get this done in December. And I've got some recoding to do as well, because the way I've coded it is for me, and I know what it's doing, but the inputs are wrong. I've got to recode all the inputs differently, and then the way that it trades. So there's quite a bit of recoding to do, because you tend to bodge these things together and not worry about how it works. And then you suddenly go, well, the way I've done it, if I flick that input, I know what it's doing, but it's just not going to work for everybody else. So seems like you could reduce the string of losses, losing trades. If it seems like if you could reduce the string of losing trades, it could make a huge difference. You can't control that. Because the string of losing trades is made by the market. You can reduce the string of losing trades by increasing your initial stop, or increasing your trailing stop, or increasing your break even. So you can reduce those down, but your profit will reduce to under 100K as opposed to up in the 500,000 range. So there's a payoff. But yes, you can reduce the drawdown dramatically. You know, in this one, I've got a £250,000 return there off of a 75K drawdown, or I can take a 500,000 off of a 150K drawdown. So yeah, 150K to 500,000, 75, half of that, to half of the profit, £250,000. So you could go down lower than this. You could get this down to 25K, but you'll only make 100. I've tested every variation. There is no variation where it does a 5% drawdown and makes £500,000. It just doesn't happen. It's not. And this is the thing. This is the holy grail. Everybody's got out there these holy grail EAs that do that sort of thing. They don't do that sort of thing long term. They might have a lucky run. And I could make a lucky run. You get into this thing, right? Here, let's say that's the first trade you ever took with this. You were sitting on 230 grand. You ended up on 410. You made 150 grand with virtually no drawdown. Yeah. But the thing that made that happen is not the EA, it's the market allowed the situation that the EA is programmed for to work. It didn't allow it to work there. But other variations of the EA, if you switch it around, I mean, I'll just pick some settings at random. Let's go with a tighter trailer. And let's have a bit of a bigger break even. And we'll go with not using fixed stops. So we'll use the opposite end of the range instead of a stop loss. Yeah, I don't know what this is going to do at all, but we'll run it and see. You know, you're going to get a totally different result. Still getting some home runs in there. Look, but look at the curve, right? Look at this. There's a lot less of that and a lot more of the gradual incline on it. Yeah, look at this. This is much nicer. So this is a much nicer thing to trade evaluation on, I would say, probably. I don't know what variation this is. What did I pick? It's on a different tab. It's one of these. It's dollar risk. So I would anticipate us coming out with a very, very, very small drawdown and a very small reward on this one. But you can't control this. That's chop. The market chopped that week. This is akin to what we're seeing on the DAX. Yeah, this is akin to this. That's hell for any trend. Don't forget, this is a trend capture EA, breakout capture EA. This is hell for that EA. There's nothing you can do about when this happens. It's just going to happen in the market, and the EA is just not going to perform. There you go. So we only made 40 grand. We only drew down 12K. So that is nowhere near. I mean, that's just picked settings at random there. That's nowhere near hitting your total drawdown on the account. And it produced only produced you something for 20 grand a year. It's not, it's not. But you stick this version on with a home run version with a medium profit, medium drawdown version. You stick all three of them on the same thing together, you're probably going to get a lovely result. But there is danger in blowing an account. And this is the thing. I got funds. I'm fortunate enough to have funds where I could stick a decent amount of cash into this and run it myself. And I don't care about taking 90 grand drawdown on my account to make that. Next year, this time next year, I don't have a mortgage. Yeah, so everybody's going to be able to use this in a different way. The data is very, very, there's your 40 grand with only 15 grand a drawdown. You've got 50 grand to drawdown, and it's either doubling, trebling, or quadrupling whatever your drawdown is. So the reward is always positive. It's just, the tighter you get, the more of those tiny losses you're going to get waiting for those home runs. But if you give it more room to breathe, it will breathe more and make more. And you're setting yourself a profit target. So if I said every day I'm going to go for a 5% profit target, you're going to hit that profit target and bank more regularly. So your equity curve will be a lot more like that. But it won't get them, because you're taking your profit off the table at 5% or 4%. So you're never going to get a home run, but you will get a lot more of that. But what is that? If you're in prop, that is the most important thing, the drawdown, because that is what blows it. That's the only thing that blows. It's the only thing you will ever get into trouble with, isn't it? Is drawdown. So you've got to know what to use for what situation. So right now I've got this account funded. I've only still got 2.5 grand drawdown. So when the account goes live, I've got 2.5 grand to play with. When I've made 5 grand profit, I've got 5 grand profit to play with. So now I can increase my drawdown. So then I might decide to put a different set file on there. When it trades up to 10 grand, I might then go, right, let's go even more aggressive set file. Or let's stick the home run on with the one I'm running. We'll run double the trades every day. And let's hope we get the big paydays in there. And I'll draw the big paydays out and leave the rest in. There's unlimited ways to use it. But you just can't touch it. That's the thing that people are going to struggle with. Like me yesterday, I closed all that out. Yeah, I closed this all out at profit yesterday because I manually closed them. If I hadn't manually closed them, this would have made even more yesterday. But I just had to shut it because it passed. There is such a thing as making too much money. But it's not easy to do, obviously. And it's not going to happen every day. That was an exceptional breakout yesterday. Beautiful. But I got out here and I missed all of that. It wouldn't. It would have, because it had a massive trailer on it. It would have. I don't even want to think about it. But it's not real money for me at the moment, this one, because that was only a valuation. What if your trading an account is only 15k real? will the profit be reduced? Yep. So you adjust. You adjust. And again, this is something you're going to need to test. So you can risk an amount of money. You can risk a percentage of your account. So yeah, you can either risk an amount of money or a percentage of your account, and you can adjust the stop to either be a fixed stop or use the opposite side of the opening range. They all work. It's up to you. Again, it's up to you. They all work. It's like it's one of those EAs where it all works. So I don't know what you want. So you have the option. But if you've got a 15K account, let's test it. You've got 15K account. Let's see what would happen if you used $100 of risk on a 15K account with those. I don't know what that's those. They're pretty conservative, those settings, aren't they? I mean, you're going to need to test this. I'm not going to go through and do every account size. I'm just, this is why I'm going to explain the results and what they do, and then it's off. You go and spend some time on it. Yeah, we'll see where it goes. Let's see where it goes. Don't forget these are the conservative settings, so I don't know how well it's going to do. We're halfway, roughly. So we had a bit of a losing streak there. So, I mean, ideally, but we want to try and get 30, don't we? We want to double the account if possible. Would be nice. But the other thing that's important, which people are going to miss, you're not losing money. So if you're a losing trader right now, worst case scenario, this strategy makes you a break-even trader. Worst case scenario, you're going to stop losing money. There we go. So finished 20 something. So we made 11 grand profit on a 5K drawdown. This is why this figure is irrelevant. Look, 22.1. This is a 15K account. 5 grand is not 22% of 15K. It's from peak to trough. So you forget the percentage. It's the amount, right? On a 15K account, I don't know what your drawdown would be. That probably surpassed it. But did it surpass it at the beginning while you're doing evaluation, or did it surpass it up the top after you'd already built your buffer zone from your initial balance to a high? If it drew down there, it doesn't matter. It doesn't affect you. So that almost doubled the account. So it's not great. People would snap your arm off, wouldn't they? I've got an EA that's not great. It didn't quite double the account. Really? But, you change the settings on it and go for those big ones. Let's just leave it at that. That's too tight. Let's do that. I don't know what these settings will do either. But this is more along the home run line. So this might be more dangerous because you've got a small account. You might find you hit drawdown too quick. We drew down to 12 there. We drew down to 12 again. We're getting these home runs in. Look, up to 18. So you're going to get there faster when you get the home runs. If you don't get the home runs, you're just going to trickle. It's just like it's like a bucket. You plug in that hole and filling it back up with water, and then it's trickling out of the hole, and then it's plugging it back up. The faster you can plug it, the more home runs you can achieve, the better it's going to perform. So that one, we got roughly the similar drawdown. We only made 3 grand. But again, we only made 3 grand. We didn't lose any money. So you might find that you need, on a 15K account, you're going to need to go with a little bit more risk, maybe 200. I don't know what the settings are. So break even, that will get us into those trades faster as well. I don't know, but you get the idea. I'll let that run and see what that does. Well, it's a little more than just a simple ORB strategy. You've got a lot of extra bits of logic in there. Yeah. Yeah, I mean, there's a lot. They've put a lot of extra logic, and I will put more in. But the strategy, the basis of the strategy is very simple. I've tested a simple ORB entries with trading stops, good, consistently profitable, but not spectacular, and often busts my Forex fund loss limits. Yeah, so the way to stop that happening is to adjust the lot size, the risk. And again, this is it. You know, what you do and what I've done to pass this evaluation, which I passed yesterday, it's on aggressive mode. It's risking 1%, and it's passed. I put that now onto a live account. I will risk 0.25%, so that it's never going to blow. It's not going to get close enough to blow the account. It's not going to have a problem there. But if you leave it on 1%, yeah, you've got a problem, haven't you? Potentially, and it will blow accounts, you know. But this is the thing: the 50k account I've just got with what's it called, with the futures company, Take Profit Trader. That's cost me 285 plus 170, 285 plus 170 plus 85, 540. So it's cost me $540 on 3 evaluations to gain 50k of funding. So if this EA gets put, I can't put it on there because it's futures, but let's imagine this is a Forex, a CFD prop firm. If you put this on there, and it takes you 3 attempts because you have 2, you get in here and it just about hits your drawdown. You get in here and it just about hits your drawdown. You get in here and it passes, and then it works. You get in here or whatever, and if that costs you on these 3 evaluations $500, and then it goes on to a winning run and makes 30k. I don't know what that is. This is a 15k account. It made way more than that, but it's a cost. That's a cost of business. So I've spent $540 getting the account, right? If I make more than $540, I'm in profit. So if I have 3 good days on that account on the futures and I make $1,800, I can draw that out, and then I could use that $1,800 to buy another 3 prop accounts to put 3 different variations of the EA on. Now I've got 200k under management, and yeah, every time it blows an account, all you do is you start another one, put it back on. Overall, though, you're going to have a positive profit curve. So that made 50k. It made 22k a drawdown, and again, it depends when that was achieved. So you've got 15k. If you traded it up to 30k, and then it drew down by 22k, yes, you've blown the account. But if you'd done that, what my Forex funds would have done is say, well done, here's your 30k, because don't forget, when you get profit targets, they double your account. So you would actually be, by the time you probably got that drawdown, you would be trading a 30k account, in which case it doesn't matter. But you pick the set file, you pick the safe set files to pass with, you pick the aggressive set files to make your money. That's the way I think it should be done. But I don't know. It scales with your risk setting, yeah. Good name for the EA could be mortgage payer. Yeah, I just don't think I'm not one of these people that picks stupid names like that. It's a good name, but I'd rather just call it what it is. It's an opening range breakout strategy after all. So yeah, MQL naming requirements discourage names like that. Makes it sound like promises and guarantees profits and riches. Yeah, 15k to 65k. Yeah, but don't forget, prop should be viewed as in one of 2 ways. You either are passing to go aggressive, get paid, go aggressive, get paid, go aggressive, blow it, start again. Or you go aggressive, get past, go conservative and slow grind. There's two ways to do it. You just have to pick which one you want to do. A lot of people like me, I'm very much aggressive, and I take, I spend 20 grand on prop, and I take 40 grand out type thing. So I make my money blowing accounts and making big wins. What the idea behind this is for me personally is to use it to get aggressive and pass like I've just done, and then put it onto super conservative and let it just gradually build over time, and draw it regularly and let it double the accounts. Yeah, those are the people. Those are the 0.5%. I mean, all the figures published by my Forex funds. 0.5% of people manage to hold their prop firm accounts for more than 30 days. Yeah, that means 99.5% of people, when they get funded, blow it within a month. That's a massive, massive statistic. And it tells you how people are playing this. The same way that I am. We're going for it. We're getting big paydays. Like I made 4 grand yesterday. If that was on a live account, that account is now paused. I'm not touching it. I will wait for my payday and I will draw that. And then I will go nuts again and go all out. And it either gets blown or it gets paid. The 0.5% are the guys that are getting the accounts, and they're running super conservative. They're using 0.2%, 0.25% risk per trade. And yeah, they're going to have weeks like we do, months like we do, which aren't going to go very well, but they're not going to hit that limit. They're going to let the long-term edge play out. This is a long-term edge. This is very much a long-term edge strategy, the ORB. Days and days and days of losing, and then massive winners, or days of breaking even, not even losing. Look at yesterday. Look at what happened to me yesterday morning. I mean, it was a nightmare, wasn't it? Yesterday morning. This was yesterday morning's trades. All losers, the whole lot. On the DAX. Where are we? In there, aren't we? Yeah. Yeah. It's just like loser, 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 went short, loser, went short, loser, break even, woohoo. Yeah. You're going to get a lot of that. You just got to deal with it. And then the afternoon speaks for itself, doesn't it? I had a loser in there. Look, there's that DAX. So this is the Dow, yeah? Remember I said yesterday, the Dow broke to the upside. First. So there's the Dow entry there. So initially, after the opening range, it broke to the upside and then came down. And I got stopped out and I was like, $500 loss. Then it broke to the downside. And I took those wins to the downside. So, and look what I left on the table, but I didn't need to. And you'll have days as well when you might get into your account if you're running it on prop and see it and go, right, my open P&L is 6,500. Just stop. Right? Stop it, take it out, enjoy the month. You're done, aren't you? You're done. How much do you need to earn a month? I like to personally take 10K plus. If you like to take 1.5K plus, and that hits 1.5, stop. Take it. Don't work. Don't need to. But be prepared to sit through the crap. That's the thing. That's the message you need to get. I need to get out to everybody, because this is going to have days like this, which is going to be horrid. But anyway, that's today. That's the rest of this week, basically, what I'm doing. Getting it all ready, really. And then I will produce a video, which will be another day's work. And then, yeah, start trading it, hopefully. Well, I'm already trading it. As I say, it's already passed, isn't it? It's done. It's lovely. Right, I'll see you guys tomorrow. There's nothing much else to worry about today apart from obviously CAD this afternoon. So I say there's nothing to worry about. It's a big thing to worry about if you're in a CAD trade. So I'm personally looking for positive figures there because I've got New Zealand dollar CAD short. So looking for a decent return on that one today. Looking for a 4.25 plus rate, and then hopefully we'll get some positive movement off of that CAD. But apart from that, there isn't any other news, and it doesn't look like the market is particularly busy this morning. We're flat on the ADRs at the moment, so stuff is moving about. Aussie New Zealand is really struggling at these lows at the minute, so I think that's going to be my line in the sand there. 1055. My God, that's a big round number. Look at that. That's so. Just before I go, Aussie New Zealand has just tapped into a big round number, 105500, and that's where it's pulled back from. So this is a psychological level. So it's a very good line in the sand. If the psych levels don't hold, I think I'm certainly going to start scaling out of this. So we'll see what happens. But this is one or two things, isn't it? It's either a liquidity run, and we're going to get a bull candle break above in the next 4 hours, or it's just going to continue to go down. So got to treat it like it is. But we'll see. Okay. Anything else you need, let me know. I'll be in the Telegram group. I'll be back tomorrow morning, 7:50. I'm a little bit late sometimes on Thursday mornings because I have class, but I'll be back, and obviously we'll have a look at what happens with the CAD tomorrow and see where we're going from there. And fingers crossed we get that positive move and we get the New Zealand dollar CAD dropping, because at the moment it's pumping again. My God. Okay, guys. Have a good day. I will be back tomorrow, and yeah, see you then. Hopefully it's profitable.